And as we continue to follow the latest developments out of Ukraine, one of the latest headlines I'm seeing is that UEFA is going to strip St. Petersburg of the football, aka soccer, Champions League final. So yet another of an attempt by the West to exert pressure on Russia. Dan Clifton is with us now. He's head of policy research at Strategist Securities. It's good to see you, Dan. You know, as we look at the sanctions that have been put in place by the U.S., by Europe, obviously it was not enough to dissuade Vladimir Putin from invading. And so what we keep trying to wrap our heads around this morning is what would be enough? And is it now just too late?
Yeah, first, let me start off by saying that Putin has always wanted to take over Ukraine. You could go back to as early as 2014 of him saying that it was a fake country. He just needed the right time to be able to go into there. And he believes that this is the right time. The West is fractured. They're dealing with COVID. The world is just moving in very different directions. And he said, look, this may be my last chance. I'll go in. I'll take it. He has priced in these sanctions. We believe he's been working on this for at least a year in terms of the operational planning. We began to see troops moving in March, really accelerate it in September and again in December. And so he's thought through these sanctions and is willing to absorb the cost of those sanctions. That doesn't mean it's not going to be painful. It could be very painful. And there will be another set of sanctions coming later today that will be far more painful than the first round. The first round, Julie, was a pipeline that hasn't delivered any gas, a bond market restrictions that they really don't need financing for. So the next round will actually start to become a lot more biting. Being able to block those technology shipments that they need for their economy to run, as well as possibly using the dollar and preventing dollar clearing in sensitive industries. Those will be very big events if those happen. But I believe that this is larger than just an economic cost. This is an ideological crusade to rebuild the Russian Empire, and Belarus and Ukraine were critical to that as the first steps. And that's why Putin has moved further, and sanctions are unlikely going to stop that.
Dan, what does an end to this situation look like to you?
Yeah, so I keep thinking about what these scenarios are going to look like. If we just stopped at annexing parts of eastern Ukraine, it would be very similar to what happened with Crimea in 2014. Clearly, when you begin to invade a country, and right now they're taking over the airport, they're looking to get this country, take out all their military operations, take out their water and lights in the next, 12 hours or so, be able to have control over the next couple of days, given that the Ukraine military is not as well equipped as the Russian military. And if that's the case, you start setting yourself up to a similar situation for financial markets like Iraq in 2003, where the actual lead up was much more riskier for financial markets than the event itself. And while that may not be an optimal outcome for Western policymakers of Russia taking over Ukraine, at least at that point, investors can start putting bookends around different potential outcomes of that. Is this going to continue? Now, the big question is, how ambitious does Putin get if he gets into that spot? Does he continue to go further out into other parts of Europe, Poland, other satellite areas that were formerly part of that Soviet empire? I don't think that that's immediate. And so the bigger question is, how resistant will Ukraine be? Because if Ukraine is able to put up a fight and be able to draw this out, then I think there will be more uncertainty in the financial markets about this. And that means that energy prices will remain elevated. The reason that that is important, elevated energy prices, that makes the Fed's job much more difficult on an already tough job on inflation. And it raises the economic cost to the European economy, given how sensitive that economy is to higher energy prices.
Well, and all of this, again, so you have so much at stake here for the West, right? Yep. Obviously, you have a humanitarian disaster that appears to be unfolding potentially in Ukraine. You know, and basically their democracy is under threat. That's one thing, right? You have the energy effect. You have the Fed implications. So it would seem that the West would be very, very motivated to stop this from happening. But again, I come back to the question of how motivated are they? Are we going to see U.S. and European troops in Ukraine, for example? And even if we did, would that be able to stem the tide?
Yeah, excellent question. And so first, we're a war-torn country. We've been in war since for the last 20 years. Putin has sensed that. He saw it with the Afghan withdrawal in August, a very abrupt change. By the way, that was the position of President Trump and President Biden, two very different presidents, saying we got to get out of the Middle East, we got to get out of wars, focus on China. So he was able to seize that opportunity. And we put out polling data last night, right before the invasion, showing just about 10%, 15% of Americans would be willing to send troops over to save Ukraine or to defend Ukraine. So there's not that political appetite, neither in Europe or the U.S., to do that. So I think it will be much more limited from a military. Alternatively, what you'll start to see is the U.S. sending lethal weapons, lethal aid to Ukraine to help try and defend, have the Ukrainian army defend. And that's something that will likely accelerate, particularly if Congress is going to pass a bill next week overall. I wouldn't be surprised if there's some special forces in Ukraine right now trying to help with some guerrilla operations as Russia starts to come in. I do anticipate that you will see more troops moved into Poland, given the sensitivity of how close now Putin will be to Poland with Russian troops if they do take over Ukraine. All of this points to, Julie, next week, Congress is likely going to be passing a budget, a week or two, that will have a significant increase for U.S. defense spending, about 6 to 7%, up from about 4 to 5, which was where the estimates were a couple of weeks ago. So I tend to think that it will be very hard for cutting defense spending, and I think it's going to keep a bid in energy prices, at least in the short run.
And Dan, even considering the market reaction here this morning, it's been an ugly session so far, really across the board. Do you think U.S. stocks and investors are still underpricing the risk with this situation?
Yeah, so there's short-term and long-term. And I got to tell you, I talk to my clients all day. We've been working on this really since December. I think there was still a very complacent view that the cost of Putin going in and taking over Ukraine was too high, because you could take Ukraine, but then you got to keep Ukraine. And the U.S. has learned that it's easy to invade a place, but then it's really hard to keep order once you have control. So I do think that the consensus was caught offsides coming into the events of this week. So there's still some catching up to do around that. But ultimately, then investors are starting to say, okay, how do we think about this from an investment perspective? And there are plenty of places to hide. U.S. reopening stocks are not really impacted by this. COVID is starting to wane. We know the Fed is going to still have to raise interest rates. We can have a debate about whether it's 25 or 50 basis points in a week from now. But there are definitely asset allocation rotation decisions that could be made here for U.S. investors that limit their exposure to these types of stocks. And I got to tell you, a lot of mutual funds are asking a question right now whether the United States will ban what we call preferred securities in Russia, very similar to what Donald Trump did with China securities on the way out the door if they were funding the Chinese military. Does Biden do something like that on Russian securities? I don't think we're at that point yet, but that's something that's likely going to get more attention in the next couple of weeks.
Provocative. Very interesting there, Dan. Really appreciate your perspective on all of this. Dan Clifton is head of policy research at Strategist Securities. Thanks again.